Until 7:39 a.m. this morning, I was going to do my introduction about closing on the highs for the week on to Friday. Strong close to the week and follow through on Monday. Well, something happened at 7:39. We're down 7.5 handles. Someone's out there going to be buying the dip, and others going to be buying the rip. Nike getting trash, Lululemon, FDX going the opposite way. What a great day to talk retail. Ryan Craver, Commerce Canal, 8:35. It's a funky Friday here on Pre-Market Prep. March Madness, Oakland University, Rochester, Michigan, upsets Kentucky.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, starting out in the red, 7.25 handles at 52.95. We got a ways to go to find some support on the daily charts. The buck is up nicely, 39 cents at 104, just above 104. Bonds up a half a stick at 119.5. That's easy. Crude flat, 81.05. Gold giving some back after a new all-time high yesterday, down 16.40 at 21.68.30. Silver back under 25, down 23 cents at 24.77. Bitcoin futures, they're down $1,000, a little bit more at 64,335. Let's bring in Triple D. Don't want to talk about the weather and all the snow here, and we don't want to talk about the big upset in the NCAA, but...
Holy, every bracket is blown, including my own. I started so strong, Joel. I had to do a bracket, so because I'd get interested in it. Then I hadn't followed it up till that point, but I was like, I'll do a bracket. Buddy sent me the invite, and I'm off to the races. So I'm like, a start, get the first upset in my favor. I'm 7 for 7. I'm feeling the perfect bracket. And then the bracket is completely destroyed with the Kentucky loss. Game, set, match. They said something like 99.4% of brackets blown apart in that one match. 0.6% of brackets remain perfect. Wow. That was a blow. That's blown. Kentucky. What happened?
Oakland University, the local team, they just, this guy, Jack Golke, he hit 10 3-pointers, and they just got hot, and, I mean...
How do we not know that? This is your area. How did you not give us the inside tip on this one?
Dennis, people are going to get mad at us again for talking sports here.
Oh, yeah.
Let's talk the markets.
He's moving it away.
Yeah, they're already clicking off here. What is going on out here? Help us out, chat. 7:39. Let's bring in Aaron. Aaron, we're looking for news and...
Yeah, not a lot of, I'm looking for headlines out there. I showed that headline from CNBC yesterday. They're still saying stock futures tick higher, so CNBC is a little late on this. We'll keep looking for this news story. If there was one specific thing that made us move lower at that, like you said, Joel, right around 7:35, 7:39, we started moving lower. But, yesterday, market closed again at all-time highs. And, we've talked about this on the show that a lot of times people don't want to buy at all-time highs because they think, okay, it's, I've missed it. But a lot of times when the market's at all-time highs, it keeps moving higher. So we'll see if that's the trend today.
I mean, that's what it is. New highs beget new highs, and fighting it. There's so many traders that just play momentum. And when stocks are breaking out, that's when they're buying. So you get a little pullback, but the S&P breaking out to new all-time highs yesterday. The Qs ticked new all-time highs. Just not quite. Is it new all-time highs? I've always challenged that. Yeah. So it did make the new high. Like I was just looking from like 7 days ago.
Yeah, all-time closing highs yesterday.
I think it ticked a new high too, though, because we had 448.64 on the Qs, and then we touched 449.34. So we just ticked a new all-time high. IWM and whatever, it's way off its all-time highs because we know small caps have lagged. But it was a good day again for the markets. They get a little dip this morning. March Madness, and people are kind of madness in the markets here too, Joel. What's going on? We just fell about 10 handles.
Yesterday. Forget about yesterday. Yesterday's history. So we got to talk about today, and I'm just thinking, you're losing some of your leaders, and that's what I'm thinking. I mean, that move, I underestimated the power of the DOJ yesterday. Your
Oh
second
yeah, we all
biggest
did.
stock right there, Apple getting whooped. And then your other former market darling here in big time trouble, Tesla. So, man, they're shooting the generals here, and that's not good. They're just, and also, man, you come back, you're gone for a couple back, you come back midweek, and I'm just thinking, all the air in the market from that Fed speak. I mean, that there's just fluff in here, Dennis. Look at the daily. Look at the daily here. Okay. Where's support? Where's support? And I'm going to use the spider. Oh,
Where's resistance? We made new all-time highs yesterday. Yesterday's high, 524.11.
I'll give you a resistance.
524.
No, I'm going to give you, I'm going to make a 4-star resistance right now, and it's not even yesterday's high. 22.20. 22.20.
I like its feistiness. It's feisty today.
We've got Bulls versus Bears.
We should have called it Feisty Friday.
Yeah.
Because Joel's feisty.
I mean,
I'm feisty because of the bracket.
Dennis, I'm with you. I was perfect. I had that upset Duquesne over BYU.
Yeah.
I was looking perfect. I was like, oh my God. And then I, couple misses there. Obviously, the Kentucky game missed on.
It's a huge miss. I had Kentucky, I believe, going to the Final Four.
I did. I will say, and this can be our last, comment on the March Madness. I did stay. You guys wouldn't know because you're not in the office. But yesterday, when we were all here and we had the games on TV, I said I think Oakland's going to have a shot because I said they have the best 3-point shooter in the country. And Kentucky plays zero defense, which is exactly what you saw happen. I mean, Kentucky's defense let them down. I didn't back that up in the bracket, but I did have a bet on my DraftKings account for Oakland to win money line. So I hit that bet. That was the only
Wow, hedging yourself. I often want to do that. We brought it back to sports here again. Yeah. I often want to do that as like bet against my team just so I'm happy either way, but it never works.
Either
You're still pissed off even if you win money.
Either my bracket's gonna do well or my bet's gonna hit. One of the two's gotta happen.
Okay. This is the last thing, and then we're gonna move on.
Okay.
You're not moving.
This is just a testament of the decay of talent in the NCAA. Calipari has been trying to bring in these freshmen and go, one and done. The freshmen play absolutely horrible. And so his I think he won one title, but it just doesn't work. You need experience. You need players, playing together. So I couldn't be happier. Plus Oakland, if I would have not went to Michigan, I would have went with my buddies and swam at Oakland. They were Division III. They were Division II. Now they're Division I. So with my Michigan on the sidelines here,
man, you should have been all in on Oakland.
Oh yeah, I'm even cheering for Michigan State. I mean, I just want someone from Michigan or the Big Ten. Okay, let's do some earnings. We're gonna get fired here. Everyone's gonna sign off.
Yeah, they're going nuts in the chat here.
Yeah,
so let's bring it back though to Tesla because we got to talk Tesla for a bit. So give us the headline, AB, because Joel talked technicals just quickly on the breakdown. Mentioned, shooting the generals. Well, this thing, Tesla's been replaced as a general a long time ago here, it looks like, by the market. But give us what the news is here today, because Tesla, another bad day.
Yeah, you have a couple headlines here. So the big one is that in China, Tesla shares are trading lower following a report suggesting the company has reduced its China factory production output, which we've talked about, lowering demand in China and across the world for EVs, but you have increased competition in China as well. Again, the BYD company that's backed by Warren Buffett putting out a lot of really cheap EVs in China, XPeng, NIO, all these different electric vehicle manufacturers in China competing with Tesla. You also have a probe coming from Elizabeth Warren into Tesla. Urges probe into Tesla's board's independence. Elon Musk says senator's advisor is SBF's dad. So I don't know, some multiple headlines coming for Tesla this morning, down about 4%. But the big one again is that Tesla's demand in China weakening, and now Tesla's talking about cutting production there. Not great news if you're buying the stock.
No. And here's the issue is it's just out of favor, remains in a downtrend. Got up almost that 180 yesterday. I considered selling the entire position. I've lightened up because when you're wrong, what do? You lighten up or you get out, you admit you're wrong and you move on. My thesis was the bot story, could eventually get hot, driven by AI. It's just too far out. When you start thinking about it, it's too far out. And we've got a car company here in a higher interest rate environment where people aren't buying as many cars. That's the issue that they have here. People aren't buying as many EVs. They may be buying gas guzzling cars still, but we can see the sales going on in the Ford Lightning. Not that that is Tesla whatsoever, but EV is struggling. So the core business is struggling right now. I do believe it'll be a great bot story here long term, but short term here, the stock is completely out of favor. The headlines continue to be negative, and I don't know what turns it around. So, you got up near the 180 resistance level. Now it's back down here at 166. I have a small piece left. I wish I didn't have any.
Yeah, it's just going to be a smaller piece by the end of the day.
That's a smaller piece right now.
Yes. No, I mean, it will bounce because that's what Tesla does, right? It has, the buy the dippers. It's a love stock. But when someone asked about this yesterday, I believe on the closing print, and I was just like, man, I mean, look at the bounces. I mean, it's had some pretty good declines, but look at like the lower highs, I mean, just bounce, lower lows and lower highs here. We're trading near the lows of the pre-market session. I'll give you the low 165.43. Double bottom 165.90 or below that. I don't know if we're going to see the recent low at 160.51. So I think you would thicken up as you get towards that area. Gap fill at 171.80. So if you're looking to get out of there, that's yesterday's low. But you want to see a really surprising chart because, you're looking at Tesla.
Sure.
You're thinking maybe we're slowing. And I hope you haven't looked at it, Dennis, and I'm not going to put the chart up yet, but where do you think GM is?
Well, I know it's up over 40, so I haven't looked
Yeah.
at it for a while either. $43.
Yeah.
I mean, the traditional automakers, they're coming back. They've been coming back. We know that, Toyota's making new highs. So traditional automakers been coming back on the backs of I think shareholders are actually happy that they're going to stop dumping money or slow down the dumping of the money into the EVs because they're not profitable. I mean, Tesla's made them profitable, but nobody else has. So the market likes that people are talking about hybrids again. The market likes, this movement away from EV. And that's why they're rewarding General Motors. And you know what? Ford is sleepy and starting to look like it's perking its head up here too. So maybe Ford is a buy here right now. Again, I have trouble buying these traditional automakers when interest rates are going to stay higher for longer. But the Fed, so here's, a point too. The Fed, Powell talking a couple days ago. Yesterday, was it yesterday? I'm losing track of days. Was it yesterday or the day before?
2 days ago.
2 days ago.
Yeah.
Saying 3 interest rate cuts. That's very good news for Ford. So you know what? On pullbacks here, maybe you're buying Ford.
I hope the EV market can, just stay afloat and stay alive for a couple more years because I do want that new Rivian that comes out in 2026. It's not that expensive.
I love the Rivian trucks.
Oh, yeah,
they look cool, man.
Yeah, the new one that's supposed to come out in 2026. I talked about it the other day. Not that expensive. It's like in the $40,000 range for a brand new SUV. And this morning, we mentioned it. It's snowy here in Michigan. I was already, kind of behind with the roads. I don't really have that big of a car. I was slipping and sliding, and then I had to stop and get gas, which that's the last thing you want to do on a cold morning when it's snowing and you're already kind of running late for work. I had to stop and get gas. When I was pumping my gas, I was thinking to myself, man, this is when it would be nice to have an EV, and I could have just gotten in my fully charged car this morning and gotten to work without having to stop at the gas station. So I'm hoping that Rivian can stay alive for the next couple of years so that I can maybe do that.
I hope it stays alive too. I want some EV options, and I think Rivian could be a player number 2. I'm not sure number 2 survives. This is the type of environment we're in for EV. We're going to start losing these companies left, right, and center. I hope Rivian is not one of them. I think if any of them are going to survive, it's going to be Rivian. So obviously, we know Tesla's going to be there, but the number 2 player, can it be pure EV play? Can it be Rivian, the number 2 player? I mean, the other, they're giving you a little bit of a window here when, Toyota and everybody's backing off from EV. Well, we're getting a green light here. But again, the trucks are expensive, AB. The interest rate environment is still high.
Going back to
financing here, I was looking, even on those ads or whatever, I was just looking, the Ford Lightnings are coming down. I was like, oh, that was a cool truck. I'm not going to go buy one. But financing on some of these is like 9.9%. I mean, I obviously can work with that. You have better credit, you're going to get a better rate. But I mean, someone posting rates 9.9%.
9. Wow. We got some levels. We got some levels in Rivian now. I mean, we're bunched up Keep an eye on this 1150 area if you're looking for a sustained move to the upside. Right now, we're down 22 cents. Ford, you guys mark this down. You know, I give you longer term numbers. This $13, there's probably a ton of size there. Ford topped out at 1307 in February. I'm looking at the weekly here. So you got 3 weekly highs over 13, down 4 cents today. Not sure what it's going to take. TradeTheRange.com. Buy at 12, sell at 13. That's where really.
I don't think you can get another shot at 12. You know what?
No?
I'll say it right now here. I'm bullish for it right now. Not long-term, short-term trading. I'd be buying this 1287. No position on it here at this moment. But you come back down 1250, 1260, 1270. Maybe you're even just striking for the breakout here. I think it's setting up well. I think if it gets above 13, maybe you want to wait until it's broken out, actually, Joel, because to your point, you got major resistance up there, 1303, 1307. So maybe actually wait until the breakout is really a breakout. And, we don't just get up here at resistance and fail PDD style. So, but I think, if Ford can get up over that 1310, I think you could see this as a $14 or a $15 stock.
What's in the book at 13? Can you see it? Do you have it open yet?
No. You know what? And I unsubscribed from my book. I got rid of it. Yeah, you know why?
Huh? How come?
There just isn't anything. There's no size in there anymore. And I was analyzing, and I'm like, you get some size here, size there, but then you can guess the levels,
Yeah.
So I'm like looking at it, and I'm like, it was going up again. I forget what I was paying, and somebody might know. I'm just talking about there's multiple books there. I still have the ARCA book. I still have my depth of quotes, but NYSE open book. I believe it was going up again, the pricing of it. And I'm like, you know what, NYSE open book? I'm like, I've had you for like 20 years, and I got rid of it last year. Cutting expenses, Joel. Cutting expenses.
Wow.
No, I just wasn't using it. There's just so many other exchanges to just pay, and literally only like 18% of your order flow is going there now. To just pay the huge amount there for that, open book just didn't seem to make sense. I still have my ARCA book. I still have my NASDAQ total view. I'm still paying hundreds of dollars a month for quotes. But I got rid of that it was $60, but I think it was going up, and then it was just pissing me off.
Also, I think the guys are getting a little smarter, Instead
they don't
of
show the
like instead of $1 million at 13, they tell the algo, they program the algos. I've actually programmed someone for them. They're like, I want to sell $1 million at 13 or better. So it goes 1305 bid, and they start peppering it 10,000, 10,000, 10,000, 10, and then they lock it, then the algos pick up. Oh, there really is a 13 seller out there, but a little bit too geeky here on market structure. 818 AB, take control.
Yeah, so just wrapping up on Tesla, I think the biggest thing that you're seeing is that, like you said, Joel, these rallies that we are getting are very muted compared to the ones in the past. We used to see when Tesla would bounce, there were days it would go up, 8, 10%. And that alone, that price action would get a lot of retail investors, buying the stock. You still have, a ton of retail interest in this stock, but we're just not getting those same bounces. And I don't know if it's because it's out of favor, because interest rates are higher, probably a combination of both. But the story's not over for Tesla. You probably will start getting those bounces, but you're not right now. And that's the key, that, when it does start rallying, just not that. Not what we're used to with Tesla.
Yeah.
Moving on.
We got another headline just breaking. We like breaking news. So Baidu. So we got Wall Street Journal saying Apple held preliminary talks with Baidu over generative AI. This is from the Wall Street Journal. Christian Fromhertz, Apple held talks. He's tweeting it out there too now, I see. Thanks, Christian. Apple held talks with Baidu, over AI for its devices. So we've been talking on this show as Baidu as an AI play, a sneaky AI play that just has gotten no love whatsoever. I'm long Baidu. Full disclosure, I'm long Baidu. It has not done well. I bought it at 105, ran up to like 112, 114. I sold a piece. Then it tanked. Then it's come back. Then it's tanked. Now it's coming up here again.
Sell it.
It's an AI play. This market just doesn't give it any love for it because it's China.
Yeah, and so the Apple headline, that would be just for the Apple products in China, not all over the, because Apple was already talking to Google about using Google's AI in its phones, which makes sense because Baidu is kind of like the Chinese Google. So they're saying, okay, we'll
Right.
use Google's AI in the US and then we'll use Baidu's AI in China. So Apple's trying
Again,
to.
just talks. Just
Yeah,
talks.
just talks.
No
But
deals yet here.
But that's also a sign to me that Apple really is behind on the AI stuff, that they have to now, license out a different company's technology in order to offer this service and product to its customers, saying like, hey, we want to have AI in our phones, but we can't do it. So we got to go to Google. We got to go to Baidu.
Who broke that headline? Was it the Wall Street
Wall Street
Journal?
Journal,
Wall Street
WSJ.
Journal.
Okay.
Yeah,
Okay.
WSJ.
First, I'm not going to make too many. I'll just make a couple poignant comments on this. First of all, there'd be no regulatory problems or anything, right? With Apple and Baidu doing AI together,
Putting
right?
Baidu parts into the phones. They're gonna have trouble bringing those phones over here.
Okay. Number two is there must be pressing in that Apple public relations department. First, they talk about, when I was gone, about partnering with Google, and now they're talking about doing something with Baidu. What happened? Innovation? Is it absolute? They cut out the car?
Dead there,
What
man.
is going on there? They're
Yeah.
grasping at straws.
Yeah,
I'm saying it again. They have not innovated. Take it to
Oh,
Apple.
man.
They have not innovated. They have not had the innovation that they did when Steve Jobs was there. Folks, we've been riding Steve Jobs' coattails here for the last 10 years, multiple expansion, the whole thing. I mean, what have you shown me since this? What have you shown me since the iPhone? Like, really, like game-changing products. Oh, we've got, wireless, speakers. We've got, a bigger iPhone with a better camera. And, we've got more storage. They've just kind of improved stuff. Give me a new product they've tried. And they're trying with, obviously, Vision Pro. NVIDIA's trying to do a deal with them on Vision Pro, too. And I think it's going to be something. But, man, when they just launched that, they were expecting, that Vision Pro. And I thought it may be, too. It seemed pretty cool. Then the headaches and the customer complaints and the pricing and the bulkiness.
Yeah.
And so that product has been a flop so far. Let's just call it. Vision Pro has been a flop so far. So
yeah, and I wonder if almost Apple in that sense has kind of been a victim of its own success, where it had been doing so well, was obviously the big market leader, the biggest company in the world. So Tim Cook probably felt obligated to just keep doing what they were doing, make all this money, return that value to shareholders, not spend too much in some of these. Whereas Microsoft, as kind of the one that's trying to catch up, has the opportunity to invest in these different growing industries and whatnot. And then that's really paid off for Microsoft in the long run with its investments in AI and other things. And Apple, maybe got caught behind the ball a little bit, was doing what was working, and now it's not working as well. But I do want to move on to FedEx real quick because
let's talk good. Let's talk something good here.
So FedEx reported earnings last night after the close, beat on EPS. We have EPS coming in at $3.86 versus $3.45 estimate. Sales slight miss, $21.7 billion versus $22 billion estimate. But the company did announce a $5 billion buyback. And if you look at the chart, if you look at the daily chart and you go back to the last time the company reported earnings, which was on December 20th, it's basically the exact reversal. I mean, like, FedEx dropped 12% after its last report. Today it's up 12% on the report. It basically just reversed that last report. Maybe the bar was set a little bit lower after that last one, but I mean, it seems like a pretty good report. You got the buyback and the stock's trading higher, but I don't know. I think maybe if I was holding this, I'd consider selling it right now.
If you're listening to the closing print, we went over this at 3:30 ahead of the print, and I said I kind of like FedEx into the report, and I like the setup, and I said there's nothing in there because it gapped down. So I'm like, if it reports anything okay, expectations probably lower from the previous quarter. If it reports anything okay, I'm like, this thing's going to be at 280 in a heartbeat. Well, it didn't just go to 280; it's now 294. Wish I would have listened to myself and bought some stock ahead of the report, but I didn't. But wow, it's a huge pop for FedEx. And it wasn't kind of expected. Like I kind of felt like this was going to be one that was going to actually, after last report, disappointing. And you've got to look at this too. It's like you set your own bar as well. Oracle disappoints and it beats, and it disappoints and it beats. I mean, it's all over your own bar as well. FedEx disastrous report back in December. Well, everybody's expecting a little bit less. Now they come out with a buyback. They beat on the guy. Now the guidance wasn't great, but it was just there. But they beat. And they did the buyback, and the bar was low.
Oh boy, oh boy. I mean, I can't believe this thing is within an earshot of all-time highs. The all-time high was made in May at 319.90. It's
Really?
called 320. Yeah, May of 21. I'm
Oh
sorry,
my
Dennis.
gosh, we are.
May of 21 within earshot here. But then I look at the monthly and I'm thinking, well, where was this stock 6 years ago? 6 years ago, it closed at to end the month of January at 262.48. So, yeah, it's up. It's been up and down. I mean, trade it, don't own it. This holds on to the gains today. I'll be super impressed. 299.70 is your pre-market high. Make sure you break into the 300 handle. If you're buying this thing off the open, man, just use a tight stop, especially if you open up. Let's say we open up 294 and then we go to 296 or something and then come back down to that 294. Look out, man. There is absolutely nothing in there for FedEx, but big green on the board. If you saw the spoos and everything that's happened and you had this, you'd be like, holy, thank you. And it also, what's going on with the economy? Recession. Well, I mean, FedEx is doing okay. It's a contrasign to a lot of things that are going on. The people that are talking about recession.
And it's also, Amazon, I see, all the time. The Amazon, just random cars is coming in. They're not delivering. It used to always be FedEx showing up at your door, UPS. I mean, Amazon has basically done their own deliveries here for a while here now, but FedEx is finding its way. It's finding its way without Amazon. Everybody thought, well, FedEx and UPS, it's over for them because Amazon's going to start delivering their own package. Well, you know what? Things have changed and they're finding their ways here. So that's good news, and it is a good sign for the economy.
Other top headline from yesterday was, of course, the Reddit IPO. Stock ended up going public in the afternoon. The opening price was, scheduled to be around $34. By the time it actually hit the market, opened at around 40, I want to say. And I mean, this thing popped up to 57. People took profits, sold it all the way down to 45, came back to 50. I'm always a big proponent of, if you really want to get in this stock long, I mean, trading it is one thing, right? It's going to be volatile right when it hits the market. You trade it, but I've always been a proponent. If you want to buy the stock long term, you're typically going to find an opportunity in the following months of the IPO to buy it cheaper than it was the day of the IPO. A lot of people made a lot of money, though, with this. Sam Altman himself, his stake in Reddit worth more than $600 million now after the company went public yesterday. So Sam Altman, the CEO of OpenAI, of course, big winner yesterday, as well as a lot of the other, insiders at Reddit that held shares. But what do you guys think? You buying this today?
Again, I'll say what I said yesterday. I don't trade them for the first 3 or 4 days because it's just too wild. I mean, the action yesterday, 47 to 57 to 45 to 51, back to 48. I'm not in this, and this is where everybody goes wrong. This is where everybody goes wrong.
Good point.
If you're on Twitter, you think everybody's making money except you. And in a bull market, most people make money because they're not primarily long and stocks go up. So, but what every trader does wrong is they want to jump into where the wildest action is, the craziest action. I can make the most money there. Oh, this red, I'm going to double my money in a day. Like they're going in there. That's not my style. And there is some traders who are really good at that, but that's tough trading, man. It's tough to call these wild algorithmic swings. Algo's all over this thing. The thing's trading so fast, I can't even see the quotes. So, I mean, I stay away from this stuff until it slows down and calms down. And then I can make, educated bets on this. Where, right now, I feel like when you're trading this thing, basically on day one, it's just gambling.
Boy, oh boy. Well, first of all, 5150, that's my number going for a long time here because that's halfway, 50%. You can't get more than a 50% retracement. Also, that closed yesterday. So what the bulls have to do here, if it's not going to pull a lift, and what I mean by pull a lift, and that had much worse first day price action, as you can see, Lyft, which has been making a nice comeback lately. That peaked the first day of its IPO at 80. What was that? 88.60, kind of similar to Coinbase. So right now we're going to dial up Eric Kroll. He's from the Life Cycle Trade, which tracks IPOs, and he'll tell you that there'll be an undercut of that IPO low. I mean, it happens most of the time. So I'd watch 51.50 today. We'll see what the price action is, and man, a lot of people are thinking, wow, I bought this at 56.5 because it was going to 80. I didn't think it was going to go back down to 40. So good environment to have the IPO kind of yesterday. Today, not such a great environment for it.
All right. Well, we were talking about Reddit. Now let's talk about credit, and credit where credit is due, Dennis. We talked about SMCI a couple days ago on Wednesday and about how, the huge rally and the bubble, not all bubbles are created equal. And we both said, hey, look, at some point, right, we might buy this thing on the way down. And yesterday, SMCI closed up more than 8% after the sell-off when the company announced an offering the day before. And this is what I was saying was that, like, hey, you might see this trying to kind of just the market digesting the move in SMCI, getting it back down to a reasonable valuation. But it's not like I thought, it's not. We said this thing is not going back down to where it was, 300. At some point, it was going to bounce, and it did. Now giving up a little bit of those gains, down 1.5% this morning, about $14. But again, like, I still think this story is interesting, and on weakness, I'm looking at this stock. I'm not saying, oh, look how weak it is. This thing's going to fall another 30%.
I think it's tired, though. The stock feels tired to me. I don't like the chart either. Not that I'm a huge technical trader, but
head
you
and
got that.
shoulders-y.
Yeah, you got that left shoulder in February where we were struggling to get over 1,000. We popped our head up a couple times and then a couple highs around the 1,000. Then we broke out, held the 1,000 as support, 1,200 head. Now you come right up yesterday and you kiss basically $1,000 at 994. And I think in order for you to get on the bull train here, you want to see us back up over 1,000 and take off. The stock feels tired to me. It was just such a run. So much so fast. Obviously, we participated in this. It was one of the acronyms in, or one of the letters in my trading acronym, being S, that I started in January. And it was a great trade and a great investment, like when you're investing in something, you want to make, some money over the course of time. You make 200, 300% in the course, or 200% in the course of, 6 weeks. Sometimes it's prudent to ring the register. So a lot of people did really well on this. Congrats to the bulls. I'm out of the story. Well, I day traded. Sure, I'll day trade it here and there. I have no position on it right now. But as of right now, I'm going to say it just looks like it kind of looks toppy to me. It looks a little toppy to me. Yeah, so like the NVIDIA chart looks a little more productive. It looks like it's trying to break out. The SMCI, which is a derivative story of NVIDIA, let's call it what it is. SMCI is not the driver of the AI. NVIDIA is. It's the driver for all these stocks. So at this time, I just think it looks tired.
I'm just looking at the recent price action here. You got a nice gap fill off the offer. What was the offering price? That was out. Do you guys remember what that was?
875.
I think so.
Okay. So as long as this thing holds 875, then
I think so. I
think you're
whatever
right. I think
it is.
875.
Okay.
That sounds right.
And the low was 855. So as long as it holds that area,
Uh-oh, Joel.
Joel losing his internet?
Can you hear him, Dennis? I can't.
No, it's nice. He looks like he's saying some nice words, though.
He's
not even on mute, though, so it's weird.
Yeah, I don't think he can
hear. On mute.
I don't think he can hear us either.
I know, this is kind of fun. He's just let's just see how long he goes for. Put a clock in the corner or whatever and see how long he realizes before we can't hear him. It looks like, oh no, he is on mute.
Now he is, but he wasn't.
Now he is, but he wasn't on mute. Now he is.
He can't hear us at all.
He's still going. This is a long tangent here, and I know he's saying something really good. Like, it's really exciting what he's saying.
He just gave the best market advice of all. He gave the best market advice of all time. We were all gonna get rich off of it.
I know we were.
And now it's
and he's still giving that advice. Yeah, it's very interesting. He still hasn't realized it quite here yet. I don't think he can hear us because obviously he
Oh.
would have stopped talking too. This is very interesting. Okay.
All right.
Joel, come back to us. Joel, come back to us. You're on
Joel.
mute and we can't hear you.
All right. Well, it's 8:34.
Okay.
We've got our
Let's
guest.
go get our guest. What a great
Yeah,
time to get our guest.
Yeah, exactly. We'll ditch one person and gain another. We've got Ryan Craver hanging out backstage, retail analyst. We got a bunch of retail to talk about today. Of course, Nike, Lululemon reporting earnings after the close yesterday. Let's go ahead and bring Ryan on the stream. All right, Ryan Craver, how you doing today?
Doing well, gents. How's my mic? Is my mic working?
You were good, Ryan. You were good, and we're excited. Obviously, Ryan's our retail analyst that we bring on every retail earnings season here. And we are in the middle of retail earnings season. We got some big ones yesterday, and we want to talk about all these with you. Let's start maybe with Lululemon because it's widely followed. It's having one of its worst days in a very long time. This is a stock that typically fires on all cylinders. Well, yesterday, one of those cylinders maybe run out of a little bit of poof there. It's down $63 here, Ryan. What'd you think of the quarter?
I think it's tough. I mean, last time we spoke, I told you I think it's going to continue to trade at a premium for a long time. I think it still trades at a premium. I think, what is it? Current market cap, 60 billion. They open, it's going to be just over 50 billion. Look, they lived and died off of getting into men's for a long time. That propelled same-store sales. They continued to show a decent comp sale in the Americas, but it's just too big of a business to just live and die off of that for the time being. You look at the Asia and the rest of the world's business, it had a very strong comp sale year over year, but it's not big enough as a percentage of the overall business. So I think this one trades down even further from here. I would not pick it up. I think it's going to take a bit of a beating for a while. But at the current look, they don't really have any major catalysts to get them back to that 20-30% growth rate that they were trading at previously.
That's what I was going to ask. Or sorry, go ahead.
I was just going to say, growth, I just want to add to your point. When growth stories start showing a little bit of slowing growth, it's usually your time to hit the exit button here. And I mean, we are seeing a little bit of slowing growth here in Lululemon, and it does trade with that premium multiple. So you don't think this is just a blip? Maybe this is actually going to start showing a little bit of slowing growth, longer term here, Ryan?
I do think so. I mean, I think the narrative that we're going to hear from the media, I haven't been listening to what the media is saying yet, is that there's a lot more competition with some of the other brands, Vuori, Alo, all those brands that the narrative will be that they're taking their market share. I don't necessarily think that's the problem. It's that the business is too large at this point in the US and in Canada, and the international is just not big enough to drive further growth, 20-30%. So if we think that the business is hurting, I don't think that's the case. I think that the case is that it's just not growing fast enough because it's too big of a business now.
Yeah, now, thinking about the story for Lululemon, to your point, I mean, obviously the company got big selling yoga clothes predominantly to women. The leggings, were the first big driver. And then, like you said, they got into men's and they started putting out more dressy clothes. Like I've got some Lululemon work pants that I can wear to work they are very comfortable and I love them. But I don't think that's why people are going to Lululemon to buy work clothes and all this stuff. And you walk into a store and now they've got everything. It's not just yoga clothes anymore. A few quarters ago, one of the drivers actually was this strap bag they had that was like one of their cheaper products that went viral on TikTok and everything. All the younger people were buying these strap bags. And when the company talked about that being one of their most popular products, I actually saw that as kind of a red flag because it's not the same type of, $100 pants or whatever it is. It was one of their cheaper things that was the most popular that quarter. So, I mean, I wouldn't be surprised, Ryan, like you said, if the growth just is kind of slowing here on Lulu. I still think it's a great company, but are you willing to pay that premium for a growth company that's not growing as much as it was?
Yeah, I agree. I mean, I definitely think the value is still there in the actual brand name in the customer base. I mean, again, the Americas comp sales were still very, very strong, but it's got to have another major catalyst. We thought that would be international, but it hasn't come to bear yet because it's just small as a percentage of the overall business at this point in time. I think you look at the market dynamics of the athleisure world, I think that's still strong. Whether you say it's going to be strong for the next 2 years or 5 years as Ozempic and all that type of stuff starts to play in and we start to see a change in the apparel buying, I think it's going to be strong in the Americas for a while, but international's got to pick up, and it's got to pick up fast.
Is this any potential weakness in just the overall consumer? I mean, we're getting all these interest rate cuts because we're going into a recession. It's everyone been calling for 3 years now. You think that this is just, maybe the higher end people that were withstanding, the higher prices, the inflation and stuff? Or do you think that's just more specific to Lululemon?
I think, again, if you look at the comps, they were positive. So I don't necessarily think that this is a customer trading down. I think this is a customer that still has a strong balance sheet, household assets, etc. Maybe mentally they're not buying that second pair of pants, but again, positive comp sales. It looks strong. Okay. It's just the fact that it's not big enough as a growth.
All right, let's go over to Nike real quick, Ryan, another company that reported earnings yesterday. We'll get those numbers up real quick here. Nike reported EPS of 98 cents, beat 74-cent estimates. Sales came in and beat as well, but the guidance was a little bit light. What do you think about Nike and the overall shoe market right now?
Tough. Nike not seeing any time to pick it up anytime soon. I mean, if we get back into those 80 ranges, back where it traded back in October of last year, maybe you start to look at it once you see it start to base. Whether it's Adidas, Nike, doesn't matter. Old guard's got some problems. They've got Hoka kicking their ass. They've also got On hurting them quite a bit. So I don't see anything strong here from Nike that would, indicate to me that we should pick it up.
I see a lot of people in the chat talking about Abercrombie, ticker ANF, obviously been one of the big winners of the past couple years. The company's made a crazy comeback in terms of, was cool back in like the mid 2000s, was not cool for 10, 15 years, and is cool again now. Do you think the juice has been squeezed out of Abercrombie?
Incredible. I think we're witnessing one of the better resurgence plays we've ever seen in retail right now. I would see if it takes out that last top it had, and then I would layer in personally. I'm not in it now. It's not too crazy of a valuation right now, which is nuts. But I'd push hard if it goes above that last top it had.
You mentioned international when we were talking about Lulu. One stock I've been watching is Canada Goose, which of course has a lot of exposure in China. Is this a stock that you think if China's economy, starts to get going, maybe there's less fears there that Goose could start, taking off here? We're pretty much at the lows, $12. Looking at the chart, this was a $53 stock back in 2021.
Yeah, no, Goose, I'm also not a fan of. I just don't think that, other than the China catalyst, they have for them. I think, it trades in the low double digits, mid-teens for a long time. Unless they buy another brand or they evolve their brand in some way that I'm not aware of, I don't see any play longer term. I sound like Debbie Downer on this call in terms of retail, but I do think that there still are some names that are doing very, very well.
Well, let's talk about some of those.
Yeah.
What's doing
good?
Give
us some of those.
So, big fan of Deck. I think Deck continues to play hard with some of their brands that they've got. So I would continue to play Deck. I think it's about to, take that next leg higher for a while.
Deck owns Hoka, right?
Yep.
Correct. Yep. That's a Hoka play. I know that we feel anecdotally that we see everyone in Hoka's already, but I still think it's got considerable legs to go. The other thing that we talk about a lot is the whole Costco trade. Believe it or not, Costco continues to perform well. It's always been at a premium, and it's always had that lovely moat around it with the membership. But
Yeah,
I
true.
believe Costco at these levels might be something that you might want to start to look at. And then beyond that, we always talk about the Walmart versus Target play. I'm still very negative on Target, and Walmart continues to seem to kick their butts, as well as have a very, very strong performance in the grocery sector, which we all know has had those price increases that have stuck and continue to stick. So again, Target, no-go, Walmart is kind of the play. Other than that, you've got Burlington, Ross, TJ Maxx. You look, all of them continue to steal from the department stores, whether it's the trade down effect or something else, as Macy's and Kohl's are trading only on their real estate value or whatever private equity or private plays that they can do. So if you're looking for the retailers that are still compelling, it's going to be in the off-price space.
Is there real
Burlington,
estate
Ross, TJ
value
Maxx.
in Macy's? Is there real estate value? I mean, everyone says there are, and they're getting all these bids and everything. I mean, what the heck are they going to do with those stores? I mean,
I agree. I mean, the only real
yeah.
estate value I'm aware of is the one that's right across the street from us here on 34th and Broadway. I mean, you've seen the malls. There's nothing in the malls that's worthwhile. I think if any value, it's the downtown centers, and as we saw, they're shutting down San Francisco. So it's mainly New York.
Ryan, what about, I saw you tweet recently about Shein. I mean, we talked about Temu the other day when PDD reported earnings. What are you seeing out of these kind of fast fashion or, those types of companies from China?
Yeah. So I think in terms of sales increases, incredible, right? So I think the latest thought from the information is that 60% of the Temu business has come from the US. We know they came out hot and heavy on the Super Bowl with ads. We know that they're paying for a lot of these sales, right? We saw their marketing go way up. We know that Meta, they're huge in how much they're spending. We know Google, they're spending a ton of money. I think longer term, it's going to be difficult to have those sales stick, right? I think what we're seeing is those customers that purchase, the frequency of purchases on Temu has started to decline pretty considerably. So they're going to continue to buy those sales. How long they can keep doing that, I don't know, but I also don't think the offering is sticking. So
go ahead. Sorry.
So I think PDD, I think it's going to be tough. I don't want to call them Wish 2.0, if we all remember Wish. I don't want to call them Wish 2.0 yet, but I think Temu's going to be difficult.
Yeah, and do you think, I feel like long term, especially with younger, more conscientious consumers here in America, there's gonna be pushback against. There already is against like the Shein and the Temu for environmental reasons or something. I mean, and that makes me think about like a company like Levi has tried to lean into being a environmentally friendly apparel company. You can buy a nice, good material piece of clothing from Levi's and keep it for a while versus this fast fashion stuff where someone will buy something off Shein and then throw it away after they wear it once or never wear it again.
Yep. Levi's is doing a great job. Messaging is there. They still have an attractive price point, yet still feel like something that you want to go after aspirationally, price point wise. I think Levi's is doing a phenomenal job. And I definitely like them.
Okay, so
Ryan, Yeah, let's move on to online retailers here, and obviously Amazon's a much more diversified company, with the cloud and everything. But man, it's showing some strength here, inching back towards all-time highs. We got a specific question on Shop here. That hasn't had the same kind of recovery. Talk about those two stocks, and then. Wow, what a surprise. Who delivers those packages? Federal Express.
Yeah. So obviously talking our book with Amazon, look, I can't see how anyone's going to disrupt them anytime soon. I think on the retail side, they're clearly showing that they want to make money. They want to make net income while selling goods, which is something they didn't show for a long, long time. So that business is getting slightly better, even on a lower sales base. They've got all the seller services that include advertising, fulfillment, etc. They're turning that up a few notches as well. So I think we're going to see a pretty considerable lift there. And then the AWS business, yes, it's seeing some growth struggles, but I think it's not really the catalyst for them anymore. We've got all these other businesses that are doing really, really well. I am uber bullish on them. But again, that's our core business of what we do. But I do believe Amazon will stand the test of time. The only thing that I think is a little strange is they came out with this March sale last minute, which clearly is at the end of the quarter. So maybe they are going to be a little light on sales. Otherwise, they wouldn't come out with that March sale. But I think, long term, play this thing for as long as they have a logistics network that is, unprecedented, arguably, within the United States. On the Shopify side, look, they continue to wean themselves off of some of those bets they made in the past couple of years. They continue to be the one place in which, if you're going to set up a merchant shop, you're going to use it. They continue to focus on getting bigger brands. There's nothing stopping them anytime soon. I think that they continue to look very strong, and I would assume they continue to be very strong.
So, all right,
Joel, when are we talking about your favorite Groupon?
Oh boy, you know what? I bought that when I was out of town at the end of the year, and just because Ryan Craver said to buy it, and you said did you like the call? Did you like the people here? And you know what? It's a very a strange correlation, but I remember when you told me to buy stamps.com and I poo-pooed it. So yeah, I've been riding it here. It's in a longer term thing, and it's just going based on what you said. You asked me about it several times. We've talked about it technically. It just got whooped on its earnings report. Didn't look that bad to me, but I bought it pretty good at the end of December, so it's really not something I think about too much. What I know that you were a little bit more active in it. What do you think about the long? I mean, if I think about the fundamentals of the stock and the long-term price performance, I want to dump it right away. But do you continue to be positive on it?
Yeah. So look, if you're not one for roller coasters, don't be in it. But I think that it is showing all the signs of something of a turnaround. So you look at those numbers. Granted, my stops hit post earnings to try and lock some gains, but I got back in. So I am talking my book. But you look at the numbers, you listen to the calls, they're saying all the right things. They're focused on lower marketing, lower SG&A, yet you see the reversal in the overall revenue trend. It's starting to turn positive EBITDA, positive cash flow. They're selling the assets that are not core to the business. I think you stay in it. I think you stay in it.
Yep. Okay, we've been on the line with Ryan. Anything else you want? Anything else you want to pull out? Any surprises for us here? Something on the buy radar?
The only one that I have been looking into that it helps our overall business because we can understand where retail sales are, how website sales are happening, where the e-commerce moves are shifting, which brands are picking up, the Hokas versus the Ons, all that type of stuff, is a company called SimilarWeb. SMWB is the ticker. They're a lot smaller. I think they're I think their current market cap is, $750 million, but they've got a similar story. No joke on the SimilarWeb similar
I like the
story.
pun.
They are. I actually didn't plan that one. That was kind of lame.
That's good though.
That would be a dad one. But again, they are starting to become profitable. They're focused on the core e-commerce business. I do like them. I think longer term that they could be a big play. So take a look at them.
We know SimilarWeb here at Benzinga. We use them for website traffic, analytics and stuff like that. And they're actually building out as well, like an investor side of it too, where they're, trying to sell their data to different investment firms and stuff like that. So very interesting company. I've been watching this one for a while. I know the people there. They're good people. So definitely a good call there, Ryan. We'll keep an eye on SimilarWeb.
Sounds good, gents. Have a great weekend.
Yeah,
right.
Thank you. Ryan Craver, Commerce Canal, retail expert, joining us here on Pre-Market Prep. We'll dial you up again soon, Ryan.
Alrighty, we've got about 5 minutes left. Let's we can take some tickers from the chat. Maybe we hit on all the big news stories. FedEx.
Did we miss anything?
FedEx, Lulu, Nike, everything on my list. The Tesla news.
The main three: Tesla. I'm just looking at my list here too. The Reddit. Yeah, we did pretty good here. Why don't you do ticker time then? 5 minutes of ticker time here for everyone. I see Goldman Sachs and SE and ARM. They were anticipating this, Joel. What about Goldman Sachs? We haven't done a technical Goldman in a long time, and it is blasting off. I mean, the stock just consolidated for the better part of 3 months between 380 and 390, and then in the last 2 days we went into orbit here on GS. Wow. What a move. What a sneaky move. Nobody even talking about this Goldman Sachs move. It isn't far from all-time highs.
No. Boy, we don't even really cover the earnings that much. For Goldman, I mean, you just got to be thinking about the all-time high here at 426.16. So that's close. You can also see what the all-time closing high. I would just say, just based on the monthlies here, if you get into this 400 handle, you did that several consecutive months. Stay in the 400 handle and build a base there for Goldman Sachs. And just real quick, just. It's like, I mean, the financials have been perking up here. I mean,
this is
rotation.
This is Powell. This is Powell. The Powell comments. In the last 2 days, the financials have perked up because of Powell. So bang, bang, KRE's back. Bang, bang, Bank of America breaking out. Bang, bang, Goldman Sachs breaking out. You can thank Powell when he said the 3 cuts. This is what you're getting. Banks are getting some love.
All right, going to the chat real quick. Looks like we have someone looking for Asana. We haven't looked at Asana in a while. I mean, this
$18. Oh no, 15 and a half.
Dog of all dogs right now.
Holy, we keep thinking the CEO is going to be right here, AB, but he keeps buying, and he keeps buying because he's all the Facebook money in the world. But all the Facebook money in the world is not turning this stock around.
No, and I mean, this SaaS play, software as a service, they're selling it to, I think there's a lot of competition. What Asana offers companies in terms of like organization and stuff. I mean, Joel and I have talked about how we've tried to use
horrible.
It's horrible. I mean, it's just like you got a bunch of those out there. And I think, the more you see Microsoft putting out stuff with their Office suite with AI backed stuff. I mean, like, I don't know how exciting Asana is. The one thing that it does have going for it again is that the CEO keeps buying shares, Dustin Moskovitz.
What does he own? Do we know how much percentage of the company he owns now? Because Sam Bigel's saying, could he just take this thing private? Like, is it possible that he just comes around and takes the bloody thing private because he believes in the company so much? Like, or is it still just he just owns just a fraction of the shares, even though he seems to like buy chunks continuously?
I'm seeing that Dustin Moskovitz holds more than 52 million shares of Asana, which is more than 23% of the company. For context, Vanguard owns less than 9 million shares of the company, through its ETFs and stuff. So Dustin Moskovitz owns about more than 5 times more shares than Vanguard does of his company. So yeah, he's got 23%. I mean, hey, he's got 52 million shares. I've got 0, but I could be talked into buying some, I guess, down here.
I could too, AB.
No.
I watched the pro.
Go on it.
I watched
Go
the
on
pro,
it.
and they just keep dumping on insider buy. And however the hell you say his name, I can speed the name. Markov.
Justin
How do you say his name?
Moskovitz.
Yeah.
Moskovich. That's a tough one to say.
Moskovitz.
He's buying it, but you know what? He's been wrong, and he's been wrong for a long time. If you've been following him on insider buys, you're getting killed.
No, I know. And that's why I almost worry now that at this point, insiders know what impact they're trying to have with insider buys. So they might not even be buying the stock because like they think the company's doing well. They might be buying the stock because they think people are going to react well to it. But
one more insider buy and I'll turn my company around.
Yeah, exactly. All right, we got time for one more. Let's see. We talked a lot of cars today. I see Stellantis. We're not going to do that. Let's see. Coin. We haven't looked at Coinbase in a couple days.
Okay. Let's take a look at the coiner. Boom, boom, boom. New high of the move yesterday.
Back just like that.
Which, by the way, speaking of insider buys, if you would have started buying Coinbase when you saw insider buys starting at around $60, $70, then you would have been rewarded. So I guess that goes to show you sometimes you can make money following the inside buys, but it doesn't work out 100% of the time.
No.
Tough chart here. I would just say that was a recent high of the move, right? Closing high yesterday. So your focus will be 262. Even with Bitcoin, kind of waffling here in the 60,000 handle. This is continued higher. But right now, just high of the move. Also, one, two, that been higher 4 out of the last 5 days. I'd hawk, if you want to try and wiggle out today, and a number to look forward to a little bit farther on, 262. That's been the closing high of the moves. The bonds are lifting this market up by the bootstraps, Dennis. We are up almost a stick. So we'll be keeping an eye on the TLT here.
It's helping, and the TLT is up here. I'm long the TLT long-term account. I'm also long it for a trade as well, so double long here. There's 92, man. It's got a big support level here. Markets were going. It's funny. The equities actually have led here, and we've been surprised that the TLT really didn't respond to Powell's comments. Maybe it's starting to sink in. Maybe the bond traders are like, you know what? This Fed is dovish, and maybe we got to buy. I don't know why the 2-day delay on the TLT buy, but that's kind of what we've seen happen here. We're getting a lift here, though, on the TLT today. That is a lie detector text for the IWM. So IWM trading down here right now. I think you'll see buyers come in if this TLT stays green.
Well, there you go. It is 9:01 a.m. Eastern. You've been with us on Pre-Market Prep. Please smash the like if you haven't already.
Gotta hop in here, AB. Gotta hop in here for 1 second because you didn't ask me about the guest. So we got a special guest coming on Monday, and I know you guys are, you're sick of hearing about our sports and everything. But I have a very interesting guest come on. It's a very well-known was a basketball player. He's on ESPN. His
Michael
name
Jordan?
is No, I couldn't get Jordan. He doesn't like the stuff I say about him. His name is Kendrick Perkins, and he's on ESPN a lot. And he's involved with a company called Nelly. Now, what this company does is you can invest in athletes. You can invest in an investment platform for up and coming athletes. NIL
that's awesome.
money. Yeah. So he's going to be joining us on Monday, talking about Nelly, talking about his story. He went straight from high school to college to support his family. And I've had a real nice guy, Scott Merritt, reach out to me and, talk about getting different guests on. So we'll be talking sports, but we will be talking investments too. So you guys tune in for Kendrick Perkins. That will be on Monday, 8:35.
I'm excited about that. Grew up watching him play. Excited to learn more about that idea. I've thought about that I wish I had that for artists too, like musicians. I found this lady who has a song, and I followed her on Twitter. She has less than 1,000 followers, and now she's blowing up. The song's in like the top 200. I was like, I wish I had a way to invest in this lady. But all right, 9:03.
Now we do.
Yeah, I'm sure it'll go from athletes to artists, everything. So all right, sure. 9:03.
I would have gone along Taylor Swift.
Yeah, that would have been great. Yeah, exactly.
Dennis, just don't even look at your Twitter.
I saw Taylor Swift in concert before she was anyone. She opened. I went to Joe Louis Arena. I think it was back in Joe Louis Arena even back then.
Really?
And I saw Rascal. It was in my country phase. You know, I like gangster rap. I like country. I like all music. But anyways, Rascal Flatts we were going to see. It's country.
Wow.
You know, you get the cowboy boots on that. And actually Taylor Swift opened for Rascal Flatts. That's going back a lot of years ago.
You could have made a lot of money if you would have gotten in on that early.
And the little girl that was sitting beside me, I was like, "Oh, you're a Rascal Flatts fan?" She's like, "No, I don't even know who Rascal Flatts here is. I'm only here for Taylor Swift." Taylor Swift was opening, and there was all Swifties. Like half the crowd was Swifties, even though she was opening. And obviously, she blasted off since then. That's a lot of years ago. Should have been.
Yeah.
Should have been there. Should have been investing in Taylor Swift. Taylor Swift calls would have paid.
Yeah, the leaps on Swift.
The leaps, man. Yeah, don't buy the weeklies. The leaps.
All right, guys, we do have live trading starting up after this. Smash the like if you haven't already, and tune in on Monday for our very special guest, Kendrick Perkins. We will see you guys then. Have a great Friday. Have a great weekend.